This is our Forex blog for November 29th, 2012. And like we do most days, we start off with our build your own trend currency meter. This is the best one we have. It works live only. There's no way to line up all the multiple time frame statistical tools on past bars. But it shows you which currencies are strong and which ones are weak based on multiple different time frames, multiple different statistical methods. Some of them measure the percentage of euro pairs going up, or down versus all the rest of them. Other ones measure the intensity of those trends up or down. And we also now have incorporated the daily, weekly, monthly trend. So you just have one reading. And the way to use this is basically to find a currency that's strong and buy it versus a weak. And currencies typically don't go strong or weak for this amount of time. Typically you get a little bit of weakness for 2 hours, half an hour to hour of strength, and the weakness returns. Then if during the counter trend phase there's not much strength, then you assume the trend will continue, which it usually does. And typically after 2 to 5 hours of trend, you're going to get a half an hour to hour and a half counter trend. So you can see you had about an hour and a half here of a little bit intense strength. But anytime a currency's gone down for so many hours, an hour and a half of incredible strength basically just gives you a good opportunity to get back into the longer term trend, which is obviously here down. Draw your fibs on the chart and look to buy or sell a currency at its 50% or 62% fib rate, and you should do quite well. The Australian is on the top of the New Zealand, so you want to sell that versus the New Zealand. Let's just bring up a chart and I'll showcase how you can use this to identify the best pairs to be in. So you can see starting the day out, especially at 1 o'clock, this one, the Australian was weak, the New Zealand was strong, and you had a downtrend. You have a pullback here, downtrend, pullback, downtrend. Really at 6, the strength of the New Zealand stopped. You never want to buy or sell two weak ones or two strong ones against each other. So at 6 o'clock here, you're not buying this one, but you're no longer looking for sells. And by seeing that there's no more strength, and after having so much strength for so long, and you see some weakness, you might have coming up to 8 o'clock here looked for a sell, and it did pull back about 10 pips. But after that, you can see the intensity to the upside that the New Zealand had before is gone. It's pretty clear by looking at this, and the euro extremely strong at 230. The Australian was weak. This is not a currency we typically leave running, so I'll just show you what that looks like. Strong euro, weak Australian, and this just absolutely took off. There's two entries that we look for into when we spot these currencies. The first one is a pullback, and I like about 15 to 25 pip pullback. This was so strong that this is about the deepest pullback you got. And if you identify one that's super strong like this, even around 3, the only really safe entry into this trend was when you first noticed it. It showed up here at 3. This is very strong. The Australian was weak from 1. You might have, unfortunately, the euro was not extremely strong until 230. It got a little bit of strength here at 2. So if you were watching this currency, you might have bought this breakout here. Everyone would have been well aware of this currency right here, and then it just took off. And always draw your trend lines on these super strong ones. And I typically like to draw the lowest angle possible. This one right here is too steep. You would have originally done that, but when it pulled back and it kept going up, you'd reset it here. Then you can just simply right click, duplicate this trend line slope, project it off the highs, and it gives you excellent profit targets. So if you did want to take a trade right here, you can if you have the trend line drawn on there, so you can at least follow it up. Maybe get out with a small profit, buy this breakout here, get out here, buy the pullback, get out. Now this one, if you bought, it didn't go back up, you would have had a small loss. But the point of these trend lines and also using fibs, most trends will move 3 to 5 waves your way. So this is really this one really doesn't even have a pullback. It's hard to even count the waves. Count that 1 wave sideways, 2 waves sideways, 3 waves. So at that point, really, the next wave up, you can start looking for counter trend trades if you're a really aggressive trader. You go short right here, add to your position, you had to sit and wait for an hour, and then you got a 20 pip pullback. Most of these that move up a significant amount of pips are going to pull back at least 38%. So if you miss a trend like this, you can always trade it on the opposite side, and the 38% retracement is your profit target. Notice how many pips it came away from that level. It's only came all the way down to this level, shy of 2 pips. Now the yen was also weak. You could have traded the New Zealand yen on the long side. Strong New Zealand, weak yen. Remember, the New Zealand only stayed strong until 6. But basically, up until 6 o'clock, you can be buying these pullbacks. And this is not the same kind of trend as what we saw before, but you still can draw your fibs on there to get an idea of where the next profit target is. And it wasn't even able to get to that level. And drawing a trend line off the lows, you know, the trend is up until that area gets broken. If you want to duplicate this from the highs here, from this high right here and this high, notice where it went to. Wasn't able to bust through there, and on this last wave up here, it didn't even come close to hitting the upper band. And so when it broke down right here, relatively safe counter trend trades on the way down. It's no longer a counter trend once it breaks the trend. It's a new trend line. It's a new trend down. I'm just trying to showcase some other things today than what I normally do in the Forex blog. Let's bring up the euro-dollar chart and we can go over our signals. A lot of people just like to trade the euro-dollar, pound-dollar, euro-yen, and pound-yen. Here's the euro-dollar chart, and one of the new features of our new version that we just released is we let you adjust the width and number of pixels for the bands, the center line and also the outer band. So if you want to turn the 2.0 white band into a 2 pixel thick line, you can see it shows up a little bit sturdier. I would do that with the 2 band and the 3 band. I'm just hitting the up arrow to make them thicker. That's one of the new features in the latest release. You can see our trading zones. This is the area that I thought would be the high today in the euro, and the 1.618 fib profit target showed up right here. You can see these acted as amazing resistance areas. And one of the things that I do with my own trading with scalping is I like to use the Keltner channels if it's at an area that I think it's going to reverse, you can use the Keltner channel high to anticipate a reversal and kind of scale into a big position. So when it's above the upper band, and especially at one of my reversal areas, you can get into a trade, pulls back. A lot of times these scalp trades are only 3 to 10 pips. You get into trade here, 5-6 pips, short trade here, trade here, trade here. And anytime it hits a resistance area and doesn't really come back, you really got to assume that it's going to go higher. So then you just simply draw your both your trend line, duplicate it off of here. Notice it came up to that area and went slightly above it. It's pretty safe once you have a trend line off the highs that get hit at least twice, that if it hits that area, you can get into a counter trend trade up here, especially when it's at one of my Fibonacci retracement levels and above the Keltner. You also want to draw your fibs off the last wave. Let's say from here, oops, from this low right here to the first wave up. Notice it's also the 1.382 fib off of this first wave. And if you click on this, you can see, especially when the trend line's not there, let me move the trend line out of the way. It shows you that this was a 50 pip move. The Fibonacci tool has been adjusted to show you the number of pips in a swing. Any swing of 40 pips or more, the fib targets are very likely to be major resistance coming up to it. So the fact that it came up and hit that area, it was a trend line, it was a 1.382 fib, it was my Fibonacci profit target from last night, which I thought would be the likely maximum high. The only thing we don't have going for us on this move up here is it's not at or above the 2.0 white band. I really love getting short at these areas when they're above the white band. This was kind of a explosive move up, and then it kind of inched its way up over the next few hours, and that's why the band is way up here. But nonetheless, it's a pretty high probability trade up here for a counter trend, And when you get into some of them like this that just explode down, you can also look to sell the first sell signal. Let's get rid of all the lines on here. This explosive move from here down here, typically you're going to get a 38 to 50% pullback, which it did. Very high probability place to sell right here. Notice the explosive weakness on the way down. The counter trend move up had almost no strength in comparison. Great place to go short. You already have your profit target ahead of time. So when you see these sell signals here, sell it when it goes 1 pip underneath the low. And so it took it a few bars. It broke down. Put your stop right above that swing high. Here's your profit target. You are literally getting in this at 78, and your profit target is around 50. So you have a likely 30 pip profit while risking less than 10. And that's really the whole key and secret behind trading. Now, one of the things that I'm going to showcase, it's not available yet, is a new way of using Keltner channels using the much faster digital signal processing. When this gets put on, when we finally release this uses a much faster moving average for the Keltners, and therefore the bands are much more responsive. Anytime you have a big explosive move down, you can see the much faster Keltner channels band high is right here versus up here, and that adds to your probability of selling that. Also notice on this trend up, it came down many times right near the lower band. Quick little scalp, band, quick little scalp, band, also with one of our buy signals, nice 20-25 pip move up. And once these bands get broken, it's very high probability that the trend's going to continue on the way down, because they rarely get broken. You can see it got broken to the upside here, and it continued to look to buy it. Also, the real-time momentum was up in this one.